Happy Monday, traders. It is 8:01 a.m. Chicago time, 9:01 Eastern on the 1st of October. Thanks for joining me and welcome to October 2018. Best birth month of the year. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning's market stance, risk on, the DAX leading the pack, up 0.79%, 96.5 points, followed by the Dow. The Dow's up 166 points in the pre-open futures. The S&P is up 14.5 points. The laggard today is the yen, the bond. Bonds are down 12 ticks. The Bund gold and the 10-year. That's how things are looking. News coming across. The gap up really is being attributed to the NAFTA agreement made last minute between the U.S., Mexico, and Canada. It's being called the USMCA as opposed to NAFTA. And President Trump's going to be coming out and doing a press conference on it at some point today. May affect the market. The value of this trade agreement is about $1.2 trillion worth of trade. So it's fairly significant. Other than that, looking at what's ahead of us, we have a number at 10 a.m., but we do have quite a few central bank speakers between the Fed and the BOE today. So look out for that. And since it's Monday, an overview of the week, we do have a pretty consistent week in terms of releases, with the NFP, the non-farm payrolls and unemployment, being the key figure on Friday morning. So remember, first Friday of the month is usually when we get that unemployment number. So that's what's ahead. We have a gap up in the S&P this morning and across the board, basically, and it's coming into an interesting area here. The end-of-month trading on Friday closed with the last 15 minutes trading 241,000 contracts. Very unusual. Normally, it's around 100,000 in that last 15-minute bar. And here we are, new month, new outlook, new positions, new quarter, new everything. Earnings, all that good stuff. So let's take a look at what we expected on Friday. Boom. Friday, the key expectation, this looks like a drawing of Medusa or something. The key expectation is right there, scenario 1, which played out pretty much as expected. Expected the market to have responsive buying into the MC point of control, 29.2550, as you see here. So we're looking for the market to open in an open auction and then push up, have an impulse up, and then drive, basically walk its way up, not drive, but walk its way up to 29.2550. Here's what actually happened. It ended up, by the time the trader bite was done, we opened a little bit higher, but we pushed back into the range, and then we walked all the way up to 29.2550. Let's remove that. So you can see 29.2550 being the high on the nose. And then from there, drift down, an impulse down, thanks to, again, news. And then an impulse up, back to the scene of the crime. And then the market sold off a little bit, and then it went into complete balance for the rest of the session. So this is how things looked. A pretty sharp point of control on really fairly high volume, 1.12 million. Of course, a lot of that's attributed to the end of month, end of quarter adjustment. The key things to take away from Friday is the close of Friday is just a tick above the close on Thursday. The point of control on Friday is just a couple ticks below the point of control on Thursday. 29.1950 on Thursday versus 29.19. This can be seen as a potential indication that the market's very heavily coiled. We have been in a pretty balanced range for a while. Let's take a look at the big picture. Here's what has occurred. We had the 20th and the 21st gapping up, making new all-time highs, and selling off back into the range. And then the next day we had a gap down and a kind of a completely balanced day, a bearish engulfing day after that, an inside day after that, and then we opened below and finished in the middle on Friday with this whole area now having a point of control at 29.19. 29.19, I believe that's right. Hang on. Let's throw a profile on here. Yep, 29.19 says it right there. The POC, boom, right there. And now we're trading a little bit higher, 29.34. So we're starting to challenge the high of this balance range. And once we do, we have the 21st as our template day. You can see the 21st has 3 distributions, pretty thick profile all the way across, no consensus, and it opens us up for the strong potential for a new all-time high. So that's how things are shaping up so far. You could see that the whole week last week was spent completely imbalanced. We had a lot of news-based moves and a lot of noise last week. The trade was not as easy to read, in my opinion. It was very much like a summer trade last week. Looking at the overnight, here's what the overnight's done. The news for the NAFTA deal actually came out last night at about 9 o'clock Central. And President Trump tweeted about it at about 5:30 a.m. Central, around there. This move here was really just the idea, the fact that the trade advisors were working on the agreement, and news of an agreement leaked out, and it took quite some time before it was publicly announced. And so we have a market that has gapped up. So we have a gap from 29.20 to 29.2250, just 2 points, and then immediately bullish. We have a P-shaped profile. Okay, we have risk on. We have 100% long inventory based on the closing price, the prior closing price. Delta has been relatively strong. We have a weak high at the top of this profile. We're pushing up against the 29.36 prior high. We're above the mid, and we're above the highs of the last 2 days. Fairly bullish overall, but also an opportunity for some responsive selling back lower into the support of the prior 2 days. So again, this looks noisy, but these gray bands are stock zones. These are areas I'm looking to engage with the market. Those are areas to act per my plan. Those are dynamically updated for all Convergent members who have them. That, along with the master levels, those are also dynamically updated whenever things happen throughout the day. When there's a change, I just update it on my end, and everybody else is updated as well. So it looks like noise, but really that's just the areas that I intend to engage with the market. Those are areas I expect some sort of a response some sort of response from participants once it gets up there. So let's extend this profile forward. There's the shift. It's shifted right on the last 15-minute bar. Okay, there's the shift down, and this morning the expectation, the primary expectation is we're still inside of the balance range. The primary expectation is for the market to open up, drop, keep a gap open, at some point impulse up, break through the overnight high, and then start to travel through the profile from the 21st. You need to keep the profile of the 21st kind of in sight. I'm expecting a reaction above at around 38, and then eventually I'm looking for it to push through to the next stock zone, which is a low volume node, and that leaves us very, very close to the all-time high of 2946.50 adjusted for the December contract. Okay, so that's the primary scenario. The secondary scenario, as you would have guessed, is responsive. The primary scenario is initiative, meaning it's moving away from balance. The secondary scenario is responsive, open, test higher, impulse down. Pay attention to the strong rotations, impulse down, consolidate, and then dip into the prior range. Looking for 29.25.50 to 29.24, and then come back up and basically go sideways into the close. It is Monday. Not expecting too much range today, but we are out of balance. We're out of balance with Friday. We're in balance with the entire week last week. Last week, by the way, was an inside week. The week prior had a low of around 29.07 to a high of around 29.46.50, and last week was 29.36 down to 29.07.50. Not 29.07. I think it was lower actually. Let's see. Let's sneak in there and look. So, 28.92. Sorry, too many numbers in my mind. Last week was an inside week, a consolidation compression week. As you can see from the balance here, pretty heavy profile on the left, a lot of volume there, and I expect it to resolve upwards towards new all-time highs. I'm not convinced that today we'll get new all-time highs, but it's within range. It's well within the normal daily range. So those are the two key ideas for today. You can create the third, fourth, and fifth yourself. Those are open test drives and things like that. But I'll leave you with that. Good luck today. Just wait. Take your time. If you have a smaller account or you're struggling with consistency, it's really important not to jump in the first few minutes, even if you see the ultimate setup. In my opinion, it's better to let that one go and let the market develop a little bit, so you can see who's in control and then look for areas to trade from that bias as opposed to fading your plan. Generally, people who jump in early tend to then defend their trade. The first trade they took, they tend to defend that and fight the market all day. So if you need more time to see what's going on, in general, I don't initiate in the first 15, 20 minutes anyway. I have to see what the market is building before I jump in. So if I'm doing it, I believe that you can do it. You don't need to sit back and feel like you're going to miss out if you don't act in the first minute. Okay? Just be smart. Trade what you see. Trade the probabilities, not what you feel. Good luck.